Ladies and gentlemen of the crypto space, we're live on Friday, August 15th at 11:35 a.m. It's a nice day. The market looks wild. I got some chart data up on the screen, and we're about to talk about why I say it's go time. And what does that mean? What does it not mean? That's probably even more important to talk about. It's go time. Doesn't mean price goes up. Doesn't mean price goes down. It has nothing to do with price. Price will drive you nuts. So it's go time means the right thing to have been doing is executing rule number one, owning more assets. And that carries with it that entire conversation of not paying a premium, pay a discount. Are things at a premium? Things are pretty much at a premium. What are the attributes and characteristics of the chosen assets that you've acquired while executing rule number one? Entire separate conversation. It's go time means to execute rule number one, avoiding that conversation for now. So, obviously, this morning things looked a little bit better. And right about now, we have a nice pullback to decent levels on Ethereum. As you can see here, we had our wick high. That was much more interesting from a weekly standpoint because it was intra week that where this level is drawn, whereas there was a bit of congestion up at 4,783. And we had a solid rejection at the 47.83 intra-week at least, as we see by the wicking action, and we're pulling back towards the 46.60. No, 46.67 is where we're at. 43.80. 43.80 is that level right there. So that means go time to me. All of this means go time to me. And that's the story I tell you. I cannot tell you a story that you want to hear. I can't tell you a story that everyone's going to be like, "Oh, that makes sense to me." I can't promise the things that I say make sense or will make sense to everyone, but they make sense to me. And I see this, particularly the move indicator. I'm like, "Oh, yeah, it's go time." Because what does this chart tell me? This chart tells me we've been waiting 3.5 years, 3.5 years to get to where we are right now. So that is like Christmas Day, but it's pent up almost 4 years waiting for it to come. This is the signal. Looking at price will drive you nuts. Looking at price is the noise. And that's why everyone gets leveraged flushed. That's why everyone's lost their money and they lose their money longing and shorting the market, not executing rule number one, thinking about things in the most complicated way possible instead of the simplest way possible. 3.5 years to get below this 200 moving average, symmetrical moving average, simple moving average, whatever the hell, SMA on the weekly, which is the red line. The 100 is the green line. And then you got the 50 here and then the 10, which is the darker green line. Um, you can see a spike up. Look, there's plenty of instances historically where things come down on volatility and then you get a big spike. And that's called a volatility event. And that's when things break. And that's when people panic. And that's when things like March of 2020 happen or what have you. Pick your favorite time in history. And oh, lo and behold, clearly there's a massive spike in March of 2020. Basically, the market, geez, spiked from 74 to 109 in the first week, and the second week 125, and then the third week was the blow off to 163. There's a 3 week period of rapid volatility increase, and that 3 weeks caused all sorts of havoc in the global financial system. And obviously, there was a big spike over 3 weeks as well. Oh, 4 weeks, 1 month. Look at that tiny little candle in there. Look at that little thing. Oh, it's so little. Yes. So little thing. Look at that little guy. Tiny little thing. Okay. So over a 1, 2, 3, 4 week period is a nice spike up to 180, and that was a higher peak than 2020. Where we've come from to get to where we are. You can't make this shit up. What a story that's going on. Move at 76. Okay. So that's where I'm coming into the stream today. I told everyone that I'd have an emergency stream, and there's no need to rush it. Weekly candles take 1 week to print, and today is I expressed to you my excitement, and it's basically go time in my opinion. We'll see what the story is with regard to price action. Don't let it drive you nuts. Damn, curve from 104 ish, 107 in 1 week, 107 to 86. Coming right back to the 86.7 level is a meaningful level. I could probably even draw it a little bit higher. I don't, why is it here? That's probably here because of what happened in on May 19th, May 19th, because that's a little bit lower. So it's kind of like this region here. And we make it thicker. That'll give us some useful buffer. So we'll put that there. All right. That's kind of where we are. We're starting to interact with that level. So we have 1, 2, 3 weeks. Notice last week as well, we did interact with the wick low at 87. Last week, we were also low of 87. The week before, we were low of 85, and we are currently sitting at 87. So for the last 3 weeks, we have flirted with the upper 80s, and the highs were literally 105, 105, and intra was a 1. So it's a very interesting zone. Thus, the green circle. This is the zone of interest. This is by definition a congestion. So if you take that congestion and then you look at this most previous congestion, the question everyone's asking themselves is, does it chop around and break down, or does it chop around and break up or break down? We're at the breakdown or break up inflection point with regard to a zone of congestion. I wouldn't look to anything in crypto to assess whether it's going to break down or break up. I would look to more macroeconomics, and move indicator doesn't really tell it to you because it's such a forward looking indicator with regard to the potential introduction of systemic liquidity. Yeah, it's a couple of months forward looking. So in a couple of months from now, things are more likely than less to get pretty darn weird. Short term events can be just, you know, plenty of things could be a catalyst to the upside or the downside. Just short-term headlines, sparks. You know, where are we? We're at the middle of August. We're not going to see um, FOMC. I think we'll have a catalyst before FOMC, and that'll just drive it to the next level. That solidifies whatever catalyst is coming. Maybe things calm down and you get like a Russia headlines like, "Oh yeah, everything's called off. Everyone's all friends now. We're importing stuff from Ukraine and we're exporting stuff to everything's game on." And that'd be a hell of a catalyst. So there's plenty of catalysts that could go either way. Aerodrome up at 134. Absolutely crazy what we did in 2 weeks. From 2 weeks, we were at 72 cents at the beginning of last week. 72 cents. That is a 62-cent rise in 2 weeks. Is almost 100%. We were up 100% in 2 weeks. Because we were at 72 cents and we were at $1.48. 100% 2 weeks. Those types of numbers are insane, but that occurs in crypto. It is not a small market cap asset to double in price. Absolutely wild. No, Joe, I'm still lagging. Greatest tech isn't always the greatest investment, but man, it's some seriously nice tech. I used to have Frax up here. Yeah, I still got them. Same thing. Velodrome and Frax, I kind of put in a very similar category. Now, clearly, they're not comparable in any regard. But I kind of put them in the similar category of, man, both of them are just such great tech. You would think they'd both be worth 10 times as much. That's my 2 cents. Anything else that's interesting? Gold 33.40. Oil is cheap, 63 bucks a barrel. Spell below 5. Anywho, obviously yield basis is on the way. That's very interesting. Um, let's take a look at the micros. Arrow marginally green on the 24-hour period. Concentrator got a little something. 4 transactions. Nothing else. Everything's on the negative. Minus 1.3% on RSUP. Fellow 5%. Nyla's still in the game, and there's still awkwardly liquidity. Go figure. There's $342,000 in the USDC ETH LP. That's so weird. Like people have just left $343,000 in there. Obviously, there's a lot of crap, but anywho, so you can still vote on this stuff. Go figure. USDC ETH, and that gives you 150. That's freaking weird. It's so weird. I don't know why. I thought I voted on it last week. Anyhow, USDC ETH. Thought I voted on that. Anyhow, but that's still there. Let's go back. Black getting absolutely slow. There you go, down to 54 mil. All right, now we're getting somewhere. Let's take it down to 25, and then we'll do another 80% down from there, down to 5 mil, because that's what these things do. Rex down 10%, down to 44 cents. The fact that it was at 50 cents is wild. I mean, down 10%. Very interesting. I mean, the Linnea narrative is just wild. It's strong with the TGE and all. Love that Linnea, especially what the hell they're doing with consensus and the MetaMask card. Have you seen that where you could have Aave deposits and that is spendable capital on? I don't even think MetaMask card is live yet, but that just seems wild. I mean, between the MetaMask card, the Pay card, if you guys have seen it, Pay. This thing is wild. Payy, and obviously Spritz. I'm still fond of Spritz Finance. So those are the 3 cards that are most interesting, and from a United States standpoint, in my opinion, Spritz number 1 because they have banking support. Pay and MetaMask, whatever the status is of MetaMask. The only negative probably is that you need to use the MetaMask browser plugin. I would hope not. Nobody wants to use the MetaMask browser plugin. But anyway, props to Consensus for everything that they're doing. And the fact that Rex is at 155 mil, that's wild. So I downsized my EtherX exposure. No need to have the exposure that I had. I have sized it the same as Shadow, same platform, same technology, Linnea versus Sonic. Same size. There's my other hand. Identical. Just like in my cousin Vinny. Identical. Shadow, Rex. Very nice. I come back to probably the statement of I'm known for regarding locks. Could only downsize if you could have access to it, and I prefer not locked assets. I find much more interesting. Anyway, if I didn't have the shadow experience, because that was a massive drawdown, that thing ran to the stratosphere. Probably biased a bit because of the shadow experience and that drawdown to where it's at. Anyway, that's my 2 cents there. If anyone has any questions, I'm happy to clarify. Um, Hi guys, Athletic Concept. Hey Cap, how are you? Hitting the sauna lately? I hit the sauna every day. Doing the mornings. Maybe I'll do the evenings again. I miss a couple of dudes that I used to talk about the markets and whatnot. But I don't know. The mornings are nice. Get up, take care of business, hit the sauna, and then get your day started. My 2 cents. You want to be a great investor? Got to sit in the sauna, ladies and gentlemen. Sir Joe, president accounted for stuff. Hello, Teddy. Good morning. Joel, Raul, David. Haven't seen many streams recently. Heard you say it's go time. Does that mean you think market still has room to run? The market hasn't even started running. Contrary to what most people think, there has been no bull run, in my opinion, since 2021. And that is clearly a very contrarian take. You cannot say that the bull run has ended until Move starts putting in higher lows and higher highs. The volatility in the collateral of the world is decreasing. When the volatility of the collateral of the world decreases, that is the precursor, a forward looking indicator on the supply of global currency increasing. When the supply of global currency increases, that increases price action volatility and basically nominal appreciation of assets across the board. There goes the stock market, however far it's going to go. There goes your leverage in your real estate market. And of course, there goes the crypto markets above and beyond both those other markets. So folks will be like, oh, Bitcoin was at $16,000 in 2022, and it's been a bull market since then. Yeah, no. What has occurred with Bitcoin since 2022? The downside, um, aberration, uh, divergence to the downside, excessive depreciation. So it was a return to the mean partially, and then it was the treasury companies change of narrative. Bull market is overshoot to the upside. Bull market is excessive exposure. It's when a market gets frothy. It's none of that. None of that exists. There's been no bull market where the market is discovering the price. But what there has been is a narrative change. You have a return to the mean for Bitcoin and a narrative change where there's significantly more buy pressure because of the treasury companies. And that has recently come online with Ethereum. It's starting late. So there's so room to run. You haven't had the upside aberration yet. You haven't had the bull component of the market where things deviate to the upside. Surely you're not getting discounts anymore. There's no discounts available in the market. Things have already returned to the mean, and premiums have been placed on things because of the narrative change. But you still haven't had that upside aberration. Um, with regard to opportunities, after I get through the comments, because there's two opportunities that I see. Thoughts on curve chart? I'd love to add one more final purchase to my lock. I need more cash flow. Curve, talked about it a little bit earlier. Curve looks decent. It's above that 8635 line that's drawn fat. Has some nice levels. 1, 2, 3. Just to highlight what I'm talking about. Take a circle and you put it here. And then you put it here. Not there. There. And then obviously the third level of interaction is here. So you got a level of resistance, a level of resistance, level of resistance. You had a failed breakout, and now you're pinched between the 50 SMA and a level of resistance or support. Which one is it going to be? This is very, very interesting. Yeah, it's a big circle. A big circle on the whole thing. And frankly, it's the whole thing. Check it out. This is the way my brain works. Then I would go like this, and here's another circle. And then guess what? Guess what, ladies and gentlemen? This is the way my brain really works. All of this whole damn thing is a failed breakout. All of it is a failed breakout. Now, let's move the circle down a little bit so it's on the line. Everything is a failed breakout above this one line, and the line gets set because of these levels of interaction. It happens to be one, two, three levels of very clear interaction with this 86-cent line. Therefore, anything above it was just a failed breakout above 86 cents. There's a beautiful chart in that regard. I love this chart. This is such a great chart. It really puts all that shit in 2020 and 2021 into perspective when you look at it like this. Look at this aberration to the downside. Woof. And then this nested inverse head and shoulders. That's a clear inverse head and shoulders. And this is a clear, larger inverse head and shoulders. And we are up there. I love this chart. It's got to be one of my favorites in all of crypto. Hope that helps the hook. With regard to it being a good price, I don't have answers for good price. Everyone will make their own evaluations of what they've done from a hindsight perspective, looking back from the future, whether you got a good price or not. That's for everyone individually to evaluate. Dean, much a pleasure. Hope you're well. Harsho, good morning, Cap. Do you know how much APR you're getting in voting on Shadow as it more or less compared to X33 vote APR? I don't know. I don't do X33. There's no real APR on an X33. What there is constant buy pressure, and then there's the ratio between like shadow and what do they call it? X they call it X33. They literally call it X33 on shadow. On EtherX they call it XREX. So there's a ratio between X33 and X shadow or shadow. So there's a ratio because there's all the X33 is basically just buyback and compounding and stuff like that. So I don't know. I retain staked exposure to X shadow APRs. You go over here, you go to vote, and it's going to be brutal next week. 20, 44%, 7 grand, 30%, 30%, that'd be 2 grand. I mean, maybe you could split this up to squeeze out a little bit more. $31, Jesus, 46, 25, whatever. I mean, it was like $100. Might as well just do something like this and call it a day. $106 next week is going to be no fun for X Shadow, and my reduced XREX exposure. This thing is see what it's doing next week. Obviously, with reduced exposure, all right, $200. Who's to complain? Um, I expect. So what'll happen on these L2s like Sonic or Linnea? When the market slows down, it's going to slow down significantly on these non-main experiences. These are these are emerging markets of emerging markets. These are very small markets. So if there's any fear whatsoever in the markets, capital rotates out of the smaller markets into safety, more comfortable markets, which is basically mainnet or frankly base at this point. And we could look to data to see those capital rotations over time. Where's Solana at? 12 bill market cap. Is it that, how far down? It's a big bump. It's down at 11. Jeepers. I mean, it was high as 12, 12.8, 13. It was high as 13. Capital sticky here. So I want to acquire some exposure here. So that is probably um, where my decreased exposure to EtherX is going to head over to this platform when it goes live. Samsara, which is a Nirvana product. I don't know if you folks have seen it, but RT's been talking about it. Good old RT from Hero Days. Everyone knows RT, doesn't everyone know RT? Good dude. Um, so these are some videos you may want to watch if it's interesting. Follow along what the hell is going on. Where the hell is Solve 3? Where the hell's anything that's interesting on Solana? So that seems to be something that's potentially interesting because obviously on mainnet we have yield basis coming, and this comes back to what I said just earlier, where what's the opportunities? Okay, those are two opportunities. Um, Clearly, EtherX is at a premium. Shadow's at a discount, but what the hell is the catalyst on Sonic aside from degenerate FOMO into and the history of Phantom and what it's capable of? Well, this thing's run around at 34 mil market cap, 154 mil fully diluted value. All right, 34 mil. So compare that to like a Shadow. Not X33. Shadow. Shadow. 5 mil market cap. Ramses. 2 mil market cap. For Ramses. All right, so there you go. There's your comps. And then you got this absolute tragedy in the making. Eh, Whoever got suckered by the KOLs into buying this thing that's still at 54 mil market cap. I mean, literally, people were buying up here at a buck 50, a buck 30, and it's 42 cents. What an absolute disaster in the making. That's how you absolutely wreck people. Listen, here's my 2 cents. Voter escrow works with Curve because it's Curve and they have a federation. VE33 does not work. VE33 does not work. Let me state that again. VE33 does not work. The drones work, one, because of the relays. The relays facilitate buy pressure. It creates basically a 401k situation. The relays are only part of the equation. The reason Aerodrome works is because of Coinbase and the amount of volume that goes through, and also flight school, which is pretty smart. Velodrome doesn't have flight school, doesn't have the Coinbase narrative, and doesn't have the Coinbase volume. Man, Velo's tech is wild with the super chain and the optimistic tech stack. That is crazy. Kingdom has shown us, which doesn't have any of that strength. It has Arbitrum, Ramses. It has Clio, which is dead from, and Nile from Linnea, which is now EtherX, and obviously Faro, which is competing with this absolute disaster that's on the screen right now. But the E33 does not work. What does the Kingdom have now? X33. X33 is not the E33 because it has the X33, which is the name of the token on Shadow, and Rex 33. What the hell are they calling it? Are they calling it Rex? Yeah, Rex 33 has Rex 33 and EtherX. So this is different. This isn't voter escrow because there's an auto compounding component here. So you have a bid. Which do I like better? X33, Rex 33, or relays? I mean, X33 and Rex 33 are interesting because they're identical to relays. The only difference is relays are a deposit, whereas X33 and Rex 33 are fungible tokenized deposits that do the same exact thing, which is pretty interesting. What would I prefer? What would the captain prefer? I would prefer the relay deposit of the Drome implementation, but a lock period. That's what I would prefer. I prefer locks. I like locks. I think locks are good. And I think a lot of people use them. Maybe they don't. I don't know. The point is, there's only a couple possible configurations and what is currently working. What is currently working? I think X33 has got a good shot to work. Thus, I retain exposure to Shadow and EtherX. And it's very simple. I think Kingdom, as compared to all the other VE33s, which are gone, all there is Kingdom and drones. That's it. Drones are here. and I think Kingdom hangs on for the long haul. That's my 2 cents, ladies and gentlemen, regarding drones, voter escrow, X33, and all related stuff. In the current rate and liquidity environment, do you see Arrow's growth outperforming Curve's effect? Well, Arrow is literally just Coinbase and Base. Curve's defensive mode. So Curve is not just an exchange. Curve is the CRV USD, the dollar stablecoin narrative, the liability printing narrative. Curve fits all 5 business categories of the crypto space. They're not comparable. Curve is not comparable to Aerodrome. Aerodrome does not do what Curve does. Curve is a fully vertically integrated tech stack around their dollar product. If anyone looks at Curve and sees, ooh, it's an exchange, ooh, it's just like Aerodrome, they don't understand the 5 businesses of the crypto space. Don't worry about capital efficiency. You're talking about the voter escrow, or you're talking about liquidity financing. I'm much more interested in CRV USD and liability printing and what yield basis is going to do to Curve's liability printing. Now, obviously, yield basis is going to draw the cash flow, the yield on the interest to offset, to basically arbitrage uh, and drive capital through that system, yield basis implementation. Um, so, what is the value accrual back to voter escrow, VECRV? Curve supply, CRV USD supply in circulation. So anything that's deposited to yield basis gets paired 1 to 1 with the deposit. So see $5 billion. Why not? 5 billion where the Bitcoin gets deposited to yield basis, that prints $5 billion worth of CRV USD. All those transaction fees are heading through the DEX, through Curve as an exchange. And then you have vote rentals to incentivize LPs. So there's a whole bunch of synergies in play, and obviously the whole yield basis. Whether to have exposure to YB and VEYB is another story. I don't know how that's going to play out. It hasn't launched. It's speculative, and I'm not degenerate to necessarily buy things on first launch. So I don't really have an inclination to necessarily gain fast exposure to whatever yield basis is going to do with regard to tokenomics. I may actually be more interested in the Samsara implementation because there's a very nice claim button. And there's a claim button for every instance of what is deployed. So this is Sol. That'll be every token. That's really what Samsara is going for, which is pretty interesting. Uh, so what's the word? It horizontally scales any token. So this is basically a treasury building product. And therefore, there's an associated capacity to claim and access cash flow, pretty much unlike anything else that exists. This is quite interesting in that regard. So this is obviously DevNet. This is not live. I don't know. Something to follow. That's all I said. All I said. Something to follow, something to potentially be interested in. Layer zero, 10 billion. Wow, that's a headline. God, I love Layer Zero. Such a great product. No good cash flow. Greatest tech isn't necessarily the best investment. How many times have I said that? The advisor, yeah, much pleasure. Don't you think Linnea is positioned to keep a lot of that capital on board there? I have no idea. All I know is comps, peers, and the whole voter escrow conversation I just had regarding VE, VE33, X33, so on and so forth. That's all I know. There's obviously a component of speculation. What's going to happen? How much capital gets retained? Is it going to be different than Sonic and Shadow? The Linnea narrative is surely stronger than the Sonic narrative. It's surely not as strong as the Coinbase base narrative. So there's interesting considerations there. Is the narrative strong enough for me to retain exposure? Yes. What kind of size? All right, fine. Comparable to Shadow. Great. Shadow exposure to Sonic, EtherX exposure to Linnea. Simple as that. Keep it simple. Don't overcomplicate it. And don't oversize your positions, ladies and gentlemen. Interesting how the X33 mechanics has the cap selling it. It's something that isn't usually part of the equation. Yeah. You know what's selling it is if you're referring to downsizing the position, that was a matter of position size, and that's a matter of comp. So that's portfolio management. Um, so those are the considerations in that those how you think through actions to take. I like Linnea. I want exposure to Linnea. It is not nearly what Coinbase is with Base. I don't think it's necessarily going to be what Ink is to Kraken. Consensus, maybe with Joseph and was it Game Sharp Gaming or whatever, the Treasury, what they deploy liquidity. Why are people going to trade on Linnea versus another chain, especially Base, especially with Aerodrome integrated into the Coinbase app? Oh my God. So the narrative there is crazy. Um, but shit, it's consensus. It's consensus. That's crazy. Like they do so much and are Ethereum in so many regards. And the MetaMask card looks great. And they're basically integrated with a deck that happens to be a Kingdom downstream product that has been in development for so long. And Kingdom has this X33 type of idea, which was tried and tested with Shadow on Sonic, which works. It's stable, it's functional. It has declined, but everything declines and reinflates and deflates over and over again. Such is cyclicality of everything. So that was a matter of market cap, so on and so forth, position size. Those are very important considerations. You can't just manage, you can't just buy things and have exposure to things without thinking about the holistic composition of what you own. Has it fit into the larger picture? Is it appropriate position size? Do you have excess exposure? Are you able to afford adequate exposure? If you cannot afford adequate exposure, that is a reason to invalidate any exposure. If you are going to underexpose yourself to an asset, you might as well not buy it at all and concentrate that capital into something else to have appropriate position sizes. Or maybe don't forget to have an appropriate position size for your cash. Cash, do not undersize your cash position. Very important. Cash gives you your capacity to make choices and decisions and also allows you to pay your bills. Thanks, Cap. Much a pleasure. Who can consensus close a deal with that would be a game changer? I don't have the answer to these very fancy questions, my friend. What's the deal? Why is Aerodrome so interesting? Because Coinbase offers access to people that don't can't understand DeFi, can't understand anything other than going to Coinbase.com or the Coinbase app on their phone. And that access creates cash flow vis-a-vis Aerodrome. You can't close a deal and create something like that because that's a manifestation of what Coinbase is as a product and service to the general public as consumers. Just having, let's say they add the million ETH to EtherX as liquidity. What does that do? Why would traders just go there because there's great liquidity? Okay, liquidity is important in trading, but how many folks are trading in that kind of size? I don't know. It's probably part of the equation. I think with MetaMask, a big narrative is the card. Now, the problem there with the card is the same thing I have personal experience with like Spritz and Pay and any debit card. Most people don't make money in crypto. Most people lose their money because most people are trading and most people are broke. So while I like the card, that's not a tremendous thing for most people. So I think that's a reasonable set of observations. Hope that helps. Take Pusher. Are all the institutions buying OTC, and that's why Bitcoin price doesn't reflect 5 billion purchases? Yes, partially. I don't know. That's a decent thing to consider. Um, Also, there's paper Bitcoin to a degree probably involved, and I don't know how it affects. That's like what's his name? I don't remember his name. Charlie? What's his name? Bitcoin. Bitcoin. He does some great analysis, and he understands the way the paper Bitcoin market works really well. I forget his name. It's a Bitcoin maximalist, which I happen to like to follow, but I forget his name off the top of my head. I don't know. I don't have answers to these questions. That's a decent question. If there's a big buy and it's not moving the markets, surely it's over the counter. That's a very real statement. Makes sense. I mean, who can they onboard who have access to a similar consumer base as Coinbase? What, from a protocol perspective? They can. They can't. You can't duplicate Coinbase, just like you can't intentionally create the Curve Federation. It's just an organic manifestation of time and causality. Coinbase is what it is because it's been doing what it's been doing for all these years. Curve is what it is because it's been doing what it's been doing for all these years. And all these businesses in the crypto space have built their products and services around the Curve Federation and are completely dependent on the continued existence and thriving of the Curve Federation. Organic organic manifestations of enterprise and how they entrench themselves in the market is quite fascinating. That's something that should not be underappreciated. Like I had a lot of resistance to Aerodrome because Velodrome's better. Velodrome offers better tech, is better exposure to the entire optimistic super chain. Aerodrome is literally just base, but holy crap, Aerodrome is Coinbase, and that is something that it's not better tech. Not better tech than Velodrome. It's identical tech, but it, it's in Aerodrome is completely inferior to Velodrome in technologically speaking. Base is an optimistic superchain. Why the hell is Base not integrated into Velodrome? These are all irrelevant, and that is the point of being able to see an opportunity through your technological resistance. So you're filtering opportunities through, your tech understanding. You're like, oh, Velodrome is better. Great. But Aerodrome gives you exposure to the users of Coinbase, which is a better investment. Thus, where we are, Velodrome has lagged Aerodrome meaningfully. Does that diminish my interest in Velodrome? No. I retain exposure to Velodrome with a very nice position size. Very important, in my opinion, to have exposure to the optimistic superchain. Just like it's very important to retain exposure to Kingdom projects and you what, like rail on Arbitrum or this the VE33 was a big deal by Andre. It's an iteration on top of Curve's Michael's voter escrow. It's a big deal. Didn't work. The drones make it work because of the relays, as I said, and it really makes it work on Aerodrome because of the Coinbase narrative and that volume from them. But the X33 is the relay. It's a liquid version of the relay, so there's less potential. So that's why I sized it the way I did. There's less potential in my interpretation or my observation than with like an Aerodrome, just driven home because of the Coinbase narrative, or Velodrome with the entire optimistic superchain and the super swaps tech stack. That's crazy. So there's just less of that on the isolated Sonic chain or the isolated Linnea chain. That's the thing that always got me. You remember we said you want to buy things and own things where they expand for you. And there was a period of time where Velodrome was like, "Oh, we're expanding here, we're expanding there." Those are the greatest projects. And guess what? Curve expanding here. We're going to this chain. We're going to that chain. Curve came out with Cross Curve, and Curve now goes everywhere because of Cross Curve. So, what you buy that will give you free exposure to new things is a great question. Like Arbitrum and Robinhood, for example. Well, Arbitrum and Robinhood. It's a good narrative there. So probably want to have some sort of Arbitrum exposure. Uh, Arbitrum is lagging. Hype is not. Hype. Ramsey's the ploy on hype. I don't know. Unknowns there. I think everything around Arbitrum and hype, it's a lot of unknowns there. My sentiment is, am I satisfied with my exposure to Arbitrum and hype? No, I'm not. Something feels incomplete there. I feel much more complete with what I have my exposure to like Linnea and Sonic as compared to Arbitrum and hype. My 2 cents. Although I agree, base and arrow look exposition on that from a Coinbase, true statement. And yep, that brings us to the conclusion of my perspective for Friday, August 15th. All right, buckle up, ladies and gentlemen. Volatility approaches. It looks like we have a breakdown of the dollar through the 100 SMA on the weekly with a retest to the upside. And now all we need is the fresh lower low. You see 96 or lower. And that is a fresh lower low. That is the trifecta of bullish confluence coming off a support flipping resistance. And that's a big deal, ladies and gentlemen. My 2 cents is based on the move indicator breaking down below the weekly 200. We're heading in a favorable trajectory with regard to volatility and nominal asset pricing, especially crypto asset pricing as compared to whatever the hell's going on in the equities market and the astronomically disgusting over concentration of pig shit in NASDAQ, NVIDIA. Fuck keeps buying. It's all passive. It's all 401ks. It's all people buying what they don't get. And that's not how you get your outsized return. What's the odds of NVIDIA doubling in price? So you put $500 into NVIDIA and it doubles in price and you make $500. That's why everyone's playing options. The only source of opportunity left in equities are damn options. Just want to own a nice business at a good price and watch it go 100x on the money. Not doing that in the stock market. Just not doing that in the stock market. But I think we're going to do that in these crypto markets. That's my 2 cents. That's the captain's 2 cents, ladies and gentlemen. Did I miss this? Did I miss chemistry guy? Well, I have to get chemistry guy's opinion in. When he talked about underexposing yourself to asset buying $10 worth, you say it was kind of pointless. Why? You're adhering to rule number one. True statement, taking a smaller risk. Yes, but if what's the potential result? That's exactly what I just said about like Nvidia. I'm going to take $500 and throw it into Nvidia. What does it take for that $500 to turn into $1,000? It requires the largest asset in the world to double in price. What's the odds of that occurring? Basically zero. Basic 5%. I don't know. Probably highly unlikely is a reasonable statement. What's the odds of that occurring? Sure. Rule number one, true. Sure. Smaller risk, true. What is the likelihood of it to meet your expectations? If your expectation is to turn $500 invested in NVIDIA into $550 because NVIDIA goes up 10% of the money, that's a decent expectation. What's the odds of NVIDIA going up 100% on the money and doubling in price? Probably not the most reasonable thing to expect. Expectations are very important. Why? It's an open-ended question, and I will answer that question saying these are the things that you should be questioning. Why? Is it going to meet your expectations? I think is a good part of that questioning process. Sometimes I like to throw $10 at a shit. Okay, well, why would you do that? Why do people pop a quarter into a slot machine when they're walking through the casino? It's like boop, because that $10 could turn into $1,000 in 5 days if you sell at the right time and bought at the right time. But that's a gamble. Uh, that's not. I guess that's adhering to rule number one. Different. All right, no, that's fine. I'm not too against that at all, especially for younger persons. You have $100 and you're like, all right, buy 10 things and maybe something happens. There's a increasing speculation and increased gambling associated with that behavior as compared to other assets that have business-like characteristics, cash flow, revenue, or attributes of actual business, because clearly shitcoins don't have attributes of actual business. So there's nothing. So basically, your statement is reasonable. There's nothing wrong with doing that. But that's not the same as rule number one, own more assets that have attributes of actual businesses and produce cash flow. When I say what I say, it's coming really from the perspective of someone that has capital that's invested in rollover IRAs, that was in 401ks, and they've worked in corporate America, and they're 28, 30 years old, and they're like, what the hell do I do with my 100K in a rollover IRA? Is it going to meet my expectations? You have a capacity to buy assets and reallocate that rollover IRA into things that have potentially a better capacity to meet reasonable financial expectations. Um, that's not $10 here and there in the shit coins. So probably one of the more reasonable conclusions I could talk about or state is that a person's age, a person's work history and financial situation play directly into the choices and options they have available to them, of what they could even consider opportunistically. You have a $500 available, you're going to have very different choices and considerations than someone that has 50 grand that they have to think about. You have to respect the amount of capital you have, and it plays a role in the amount of risk you have to take in order to potentially achieve your expectations. Hope that helps. Yeah, Cap, can you talk about buying real estate? It doesn't work anymore. It's dead. What, like a cap rate five, 6, 7, 8, 9, 10? It's all every APR is APR is APR. If you're going to get 5 to 10% APR on a rental property, and you got to manage a tenant, and you got to pay property tax, and you got to make repairs and maintenance, I'm not doing that for 5 to 10%. All right, fine, maybe an Airbnb, but still, you gotta you gotta have a well-oiled machine to minimize the amount of work that you're putting into that business operation, and that's not for everyone. Certainly not for me. When we could get what we're getting on Velodrome cranking out, you know, if you want to, if you want boring, you're talking about 27%. Real estate, 5 to 10% on all that work versus 27%. And what's the upside potential? What is the odds of Aerodrome doubling versus the odds of a $500,000 house doubling? So I hate real estate. So my 2 cents is with regard to real estate, if you have a capacity to buy it, but not from revenue. That's dead. Or for wealthy people, people that I When I sit in the sauna, I'm the youngest guy there, and I encounter folks who do real estate on occasion, and they're older. They're 50s and they're 60s, and they bought their real estate after 2008, or they bought their real estate in the 90s when it was 75% cheaper. Very different equation that they were considering back then. So I would not consider real estate part of my budget at any size that's currently available in most of the United States. Oh, obviously, there's still opportunity, maybe flip it. I don't know. The fact making turning real estate into a business is frankly gross because you're dealing with people's livelihoods. So I really don't like it. Something about what real estate has become is disgusting. Then you have these developers that I don't know. It's complicated, and I choose to not think too much about complicated because it drives me nuts. I got developers down the road that did these townhomes, like Pembroke Pines for like 600 grand a piece, and I'm like, what the fuck? It was literally sheetrock walls, and I'm sure the pipes aren't going to last. And it's literally paper thin. You could hear people below you, and that's not the way they built it in the 2000s, especially in Florida. It was concrete, cinder block, cinder block, cinder block everywhere. So now they got to literally sacrifice building quality, and they're still at a $600,000 price point for a fucking townhouse. Oh my god, I hate real estate. I hate it. I don't have the answers. I literally don't have the answers. All I have is the rationale in my capital management strategy, and that is not the answers. That's just rationale. Everyone will tell their own story, and my story is I hate real estate. Most of my money is in compound at the moment. Compound's old, or maybe you meant is compounding. Well, that's a low rate of return. That's relatively risk adjusted. You might as well put it in Aave or consider Aave as well. Aave compound, basically similar tech. Um, that works. You literally you're getting 5% of your money. You might as well just put your money into compound or Aave as compared to real estate. There's literally no reason to buy $1 million home and get 50 grand a year in cash flow after taxes and fees and servicing and maintenance. We'll just put that, but then 5%, I don't know. Complicated. I'm sure you think it's complicated as well. And you have hard choices you're making, and I certainly can appreciate that. I need to start thinking about that to minimize my chance of me needing to live in the street. Oh, my 2 cents regarding real estate, not as an investment. I think it's worth the premium. If you can afford your home, it's worth it to own it. Now, even obviously in the United States, where you got property tax and you're renting, you have to pay your property tax. Fine, it's still in your name and you owe tax. So I still think that premium, that tax premium, is still worth it. My 2 cents. Um, so it's kind of like if you could afford something, is it worth it? Yes. If you can afford to own a home, yes. Now, if some financial guy will be like, no, put down 2% on a mortgage and just put the rest in Bitcoin. I'm like, if you can afford a home, get a home because that's just bucket list type shit. Scratch it off the list. You own your home. My 2 cents. Some things are worth a premium. So how should I think about it? My 2 cents. Some things are worth a premium. Would you use 10% of your crypto stack to buy a home? No. No, I don't know. I don't know. I quickly said no. I don't have the answers to this. These are hard choices. I don't know. I'm biased because of where I am in my career and my family and so on and so forth. How could I possibly give advice? I can't give advice. Can you buy a home flat out? Okay, that's a great question. If you could buy a home flat out and 10%, would that significantly disrupt your expectations for your portfolio? That's a good question. Um, you, your question presents more questions rather than answers, and you will only be able to evaluate the net result of your choices in 5 and 10 years from now after you make the choices, and then you can evaluate from a hindsight perspective. You tell a story about how you got to where you got to based on the choices you made over time. What's the line between investing and trading? Excellent question. It's a very blurred line because even an investor, for instance, I downsized EtherX, sold some EtherX, smaller position size. I traded EtherX for stablecoins to probably invest in something else. It's not trading. Trading. Trading is probably a mindset, a short time frame mindset. Traders are obsessed with total net worth. I think that's a great statement. Every trader I know, total net. Every investor I know, they don't even. Let's say real estate invest. They have no idea how much their properties are worth. Or pizza shop owners, they have no idea how much the damn pizza shops are worth. They care about how much cash flow they receive. Investors, this may be a decent line. Investors are much more interested in the cash flow their properties produce, and traders are much more interested in their total net worth. But that's probably also not completely true because traders are probably talking about what's your CAGR, compound average growth rate, what's your return for the year? Oh, pulled in 20% for the year. So I don't think in terms of fine lines. Everything has blurred lines. Everything is a conversation to be had. Hope that helps. The way to find a home is to find a lady. It's complicated. Very complicated. Ladies and gentlemen, I'm going to wrap it up for today, Friday, August 15th, 12:38 p.m. Thank you all for joining me today. As always, a good conversation. I look forward to seeing what happens over the weekend, especially over the next 1 to 3 months. Let's see if the move indicator is confirmed and a forward looking indicator over the next 3 months, as I would suggest. And I would speculate. We've been waiting for this for 3.5 years, and we're about to find out, in my opinion. 237 people made it to the end of the stream. I appreciate each and every one of you, and we are now all that much more rational because of it. I wish you all a wonderful weekend. Stay calm, cool, collected. Sit in a sauna. I highly encourage that. I will see you guys and gals later next week. Until then, peace.